What's up? What's up? What's up, my millionaires in the making? Welcome to Road to a Million Club, the podcast where we chase stacks, crack jokes, and turn your pennies into a golden fortune. I'm your host, George, the guy who's been digging for gold, literally and figuratively, since before TikTok dances were a thing. Today, we're talking about the shiniest star in the investing galaxy, gold. It's sitting pretty at $3,125 as of April 1st, 2025. And I'm calling it. It's mooning to $4,000 faster than you can say I missed the Taylor Swift Eras Tour tickets again. Oh yeah, we're going full Midas touch on this one, folks. Gold's hotter than a Barbie box office record, and I'm here to break down why it's your ticket to the Millionaires Club. We've got macro drama, technical wizardry, and some serious shade to throw at Bitcoin hodlers who thought they had digital gold. Spoiler alert, they don't. So buckle up, grab your golden popcorn, and let's take this yellow brick road to $4,000 by the end of 2025. Let's roll. All right, let's set the stage with a little glow-up story that'll make you say, "Gold, you've been holding out on me." Back in 2015, gold was the awkward teen at the party, chilling at $1,050 per ounce. It was like the ugly duckling of investments. Nobody was paying attention. Fast forward to today, April 1st, 2025, and gold's at $3,125. That's a 198% gain in a decade, folks. Gold's basically the Cinderella of the market, except instead of a glass slipper, it's got a golden ticket to the ball. And let's be real, this isn't just because gold looks good in jewellery, though let's admit it's serving Luke's better than a Met Gala red carpet. Gold's mooning because the world's a hot mess, and investors are running to it like it's the last lifeboat on the Titanic. We've got trade wars, inflation, and a Fed that's cutting rates faster than a chopped contestant slicing onions. So, stick around because I'm breaking down why gold's about to hit $4,000 and how you can ride this wave to the Millionaires Club. Let's dive into the macro mess that's making gold the MVP of 2025. First up, geopolitical drama. The world right now is giving Game of Thrones vibes, except instead of dragons, we've got tariffs, trade wars, and global chaos. Trump's administration has gone full Hunger Games on us, slapping duties on every country like it's a Black Friday sale on drama. As of April 1st, 2025, the EU's clapping back with $28 billion in counter-tariffs, and it's a global showdown. Gold's just sitting there sipping tea like Kermit the Frog, while everyone else fights. Why does this matter? Because when the world's a mess, investors run to safe haven assets faster than you can say, winter is coming. Gold's like that friend who always has your back when life gets messy. It's reliable, steady, and doesn't ghost you like your ex. From the Russia-Ukraine war to Middle East tensions, geopolitical risks are at an all-time high, and gold's loving every second of it. Next up, inflation. Oh boy, inflation in 2025 is stickier than a Stranger Things Demogorgon in the Upside Down. US inflation's at 2.8%, above the Fed's 2% target, but let's be real, those numbers are as cooked as a Gordon Ramsay steak. Eggs cost more than a Netflix subscription, and gas prices don't even get me started. Inflation erodes the value of your paper money, and that's where gold swoops in like Captain America with his shield. Gold's been an inflation hedge since forever, and with central banks printing money like it's a TikTok trend, gold's value is soaring. And let's not forget the Fed's rate cut party. The Federal Reserve's been slashing rates like they're trying to win a Dancing with the Stars trophy. In 2024, they cut rates by 25 basis points in December, and now markets are pricing in another 64.5 basis points of cuts for 2025. Lower rates are like catnip for gold. Why? Because gold doesn't pay interest, so when rates drop, it's like choosing between a 0% savings account and a shiny gold bar. Guess which one wins? Lower rates also weaken the dollar, and gold's like Barbie to the dollar's Ken. When Ken's down, Barbie shines brighter than ever. Now, let's talk about the big players who are making gold the belle of the ball. Central banks are hoarding gold like it's the last slice of pizza at a party. In 2024, they bought a record 1,037 tons of gold, and that trend's continuing into 2025. Countries like China, India, and Turkey are diversifying away from the US dollar faster than you can say, "I'm out." COMEX vaults are holding 1,318 tons of gold, proof that the big dogs are stacking bars like they're playing Tetris. And don't even get me started on gold ETFs. Investors are pouring money into ETFs like it's the Squid Game of investing. Everyone's rushing to win the gold prize before the game ends. In 2024, ETF inflows were in the billions. And that's accelerating in 2025 as retail investors join the party. It's like the Great British Bake Off. Everyone's trying to bake their golden cake, and the oven's on fire. When central banks and ETFs are buying, the bull run is for real. So what does this mean for gold's price? All this demand is pushing gold to the moon, and we're not stopping at $3,125. I'm calling it $4,000 by the end of 2025. But how do we know that's not just a pipe dream? Stick around, because I'm about to get nerdy with some technical analysis that'll make your jaw drop. All right, let's get nerdy with some technical analysis, because I know you love a good chart as much as I do. I'm looking at a monthly candlestick chart of gold spot US dollar on a logarithmic scale spanning from 1993 to April 1st, 2025. Gold was at $2,664.46 back then, but now it's at $3,125. A breakout that would make even the Wolf of Wall Street proud. Gold's been trading in a long-term ascending channel since the early 2000s. The lower boundary has been support like in 2001, 2008 and 2015, and the upper boundary has been resistance like in 2011. On April 1st, 2025, gold was testing that upper resistance at $2,664.46, but now it's broken out to $3,125. This is a bullish signal bigger than a Billboard Hot 100 #1 hit. On a logarithmic scale, a breakout like this typically leads to a 30 to 40% move. If we take $2,800 as the breakout point, that's $3,640, $3,920, but I'm aiming higher. $4,000 is in play, baby. It's like gold saying, I'm breaking all the rules. Let's talk Fibonacci, because who doesn't love a little math magic? From the 2015 low of $1,050 to the current $3,125, the 1.618 Fibonacci extension lands at $3,950, and the 2.0 extension is $4,200. That's our roadmap to $4,000 and beyond. It's like the yellow brick road leading gold to the Emerald City of Profits. Historically, when gold breaks out of a channel, it can rally 50 to 100%, like in 2009 to 2011, when it went from $950 to $1,920, a 100% move. A 50% move from $2,800 takes us to $4,200, aligning with the fib extension. Gold's got the juice and it's not slowing down. And for those of you who are like, George, I don't care about charts, just tell me if I'm getting rich. Yes, you are. This breakout confirms gold's long-term uptrend, and $4,000 is just the beginning. So keep stacking those bars because we're on the road to $1 million club and gold's our VIP pass. Oh, let's take a quick detour to throw some shade at Bitcoin hodlers because they deserve it. Bitcoin's been crashing harder than a House of Cards finale. It's down 25% from its $109K peak to $84K, with $93 million in ETF outflows and a 5% crypto market dip. Meanwhile, gold's up 198% since 2015. So much for digital gold. Bitcoin's more like digital fool's gold. Bitcoin hodlers thought they were the cool kids of investing, but now they're sweating bullets while gold's laughing all the way to the bank. Investors are realizing that when the going gets tough, gold's the real MVP. If crypto keeps tanking, more money will flow into gold, pushing it past $4,000. It's like gold saying, I'm the queen bee of this market, and Bitcoin's just a wannabe. And speaking of $4,000, let's talk about why that's just the beginning. We've got psychological levels, dollar drama, and more coming up, so don't touch that dial. All right, let's talk about why $4,000 is just the appetizer. The main course is coming. First up, the dollar's downfall. The US dollar's wobbling like a Dancing with the Stars contestant on finale night. The DXY's at 104.290, but trade war fears and Fed rate cuts could push it down to 100 or lower. If the dollar tanks, gold will soar like Icarus, but without the melting wings. A 5% drop in the DXY could send gold to $4,000, and a 10% drop might take it to $4,500. The dollar's loss is gold's gain, and right now the greenback's shakier than a house of cards, psychological levels. Round numbers like $4,000 are magnets for investors. Once gold breaks $3,500, the FOMO will kick in harder than a Black Friday stampede. Retail investors, hedge funds, and even your grandma will start buying gold like it's the last iPhone 16 in stock. This momentum could carry gold to $4,500 or $5,000 by 2026. $4,000 is just the warm-up act. Gold's ready to headline Coachella. And let's not forget the macro tailwinds we already talked about. Geopolitical drama, inflation, Fed rate cuts. They're all pushing gold higher. It's like gold's got a golden ticket to Willy Wonka's factory and we're all invited to the chocolate river of profits. Now, I don't want to rain on your golden parade, but no bull run is without risks. First up, a stronger dollar. If the DXY rallies to 107, gold could take a hit. It's like the Joker to gold's Batman. A stronger dollar makes gold more expensive for foreign buyers, so we might see a pullback to $2,800, $3,000. Keep an eye on that DXY, Fed hawkishness. If inflation spikes and the Fed turns hawkish, aka pauses rate cuts or hikes rates, gold could face headwinds. Higher rates are like kryptonite to gold, making bonds more attractive. A 25 BPS rate hike could push gold down to $2,900. Watch the Fed like a hawk, pun intended. And finally, risk-on sentiment. If global tensions ease and stocks start booming, investors might ditch gold for the S&P 500. But let's be real. The world's too messy for that right now. Gold's still the star of the show. All right, my millionaires in the making, let's wrap this up with some golden nuggets of wisdom. Gold's at $3,125 and it's on track to hit $4,000 by late 2025, thanks to geopolitical drama, inflation, Fed rate cuts and central bank buying. The technicals are screaming buy with a breakout above the ascending channel and fib extensions pointing to $3,950, $4,200. Bitcoin's crashing, the dollar's wobbling, and gold's the queen bee of this market. So how do you play this bull run? Buy on dips to $2,900, $3,000, diversify with ETFs like GLD, or stack some physical bars. It's like having a Harry Potter invisibility cloak for your wealth. Set targets at $3,500 and $4,000, but leave some for the long haul. Gold could hit $5,000 by 2026. Watch the DXY. If it drops below 102, go all in. You've learned the macro drivers, the technical setup, and the risks. Now you're ready to join the Road to a Million Club. I hope you're walking away with a smile, some laughs, and a plan to make that gold stack grow. If you loved this episode, share it with your friends, leave a review, and let me know your gold price predictions in the comments. Until next time, keep chasing that million, and let's ride this golden wave to the top.